All right, you're welcome back to this wonderful time we want to have to look into what we call the chart patterns, part one. Of course, you agree with me that if you're a forex trader, there's some certain fundamentals and basics you have to know on how to trade the financial market. The financial market, of course, requires a whole lot of effort and strength in terms of your technical know-how on how to play around the chart patterns. So in this time, we want to briefly look into understanding chart patterns. And of course, this is the first stage because we're going to have a part two section of this particular chart pattern. So today, we want to delve into chart pattern, market patterns, that the kind of patterns the market make that is a bit recurring, and on the basis of that, one can make good trading decision. Of course, this particular webinar is brought to you by DB Investing, and I am no other person but Mr. Shedrack. I am the financial analyst for DB Investing Nigeria. So let's dive into what we have for today. So straight up, without wasting much time, we want to look into chart patterns. And of course, in chart patterns, we're going to look into different segments of it, something like symmetrical triangles that we have seen right away. We're going to also look at ascending triangles and descending triangles. So today I'm going to basically be dealing with triangles, okay? Symmetrical, ascending, descending. Then by Thursday this week, we're also going to look into other chart patterns such as the double top, bottom, head and shoulder, and many more we'll be looking at as regarding the financial market or the chart patterns that the market makes. All right, so without wasting much time, let's look into the case of symmetrical triangle, okay? And after the symmetrical triangles, we're going to look at ascending triangles, descending triangles, okay? That is what we are going to just concentrate on for today. Okay, subsequently, we'll look at double top, double bottom, head and shoulder, okay? And then inverted head and shoulder has the case, maybe. Okay, let's put into symmetrical triangles. Of course, if you are a good mathematics student, you will understand basically what we talk about or what we mean by symmetrical. When something is symmetrical, it means it's like you can divide it into equal halves. Is that okay? Yeah, you can divide it into equal halves. So when we see something that is a bit, you can divide equally into two halves, you can say such kind of a figure or shape is symmetrical. All right. So now, in looking at the market sometimes make a kind of a structure that is in form of a triangle. This triangle, why we call it symmetrical triangle, is that it is making a lower high, like in the case of this one, we are just taking this as a case study, lower highs, and at the same time, it is making higher lows. Okay, so you can see the higher lows is making, all right, making higher lows. While at the same time, it is making what? Lower highs. So whenever we can capture a structure such as this, where it is composed of higher highs, lower highs rather, and higher lows, then such kind of a structure is termed a symmetrical triangle. Now, but there is something in regards to, in the case of symmetrical triangle, is that in symmetrical triangle, what do we look in for? We're waiting for a breakout. The case of symmetrical triangle, the breakout is usually, we don't know exactly. You can break out upwards or downwards. All right. Once we're done with all of this, we're going to look at it in a real life situation like this, go through our chart to investigate or to find out this. So when you look at your chart and then the chart gives you a symmetrical triangle, now the question is, where will it break out from? Okay, because in the case of the symmetrical triangle, the market can break out on either ways, either on the upside or on the downside. So that is one thing about the symmetrical triangle. So in the case of the symmetrical triangle, we don't have a bias because it can be upward or downwards. But once we see a symmetrical triangles, then we wait for a breakout. Okay, and the breakout could be either way. But how do we identify a symmetrical triangle? A symmetrical triangle is identified by lower highs. At the same time, the market is making higher lows. Okay, so when we see such kind of a pattern, we say a symmetrical triangle is formed. So when it is formed, we can capture it with our trend lines and then wait for a breakout. But I will also say this categorically that you cannot trade the financial market just by one confirmation alone. For instance, we have the chart pattern, assuming you have identified a symmetrical triangle. And now on the basis of this symmetrical triangle, you said, okay, fine, I am expecting this market probably to break up on the upside. And then I will come in for a buy market. But now the thing is, there is also a possibility for this market to break out on the downside. Sometimes it could do a false breakout. And then by the time you know it, it drops down again. So that is why we say that it is good for someone to actually look at 2 to 3 confirmations. But for now, we just want to look at chart patterns, and we just want to tell you that whenever you see a pattern like this, okay, when the market is making what's called a lower highs, at the same time it is making higher lows, that we wait for a breakout. And if it breaks out on the upside, then we have a buy move. If it breaks out down the lower downside, then we have a sell move. All right. So that is that about symmetrical triangles. All right. But like I've earlier said, you don't use only chart patterns alone to determine your market direction. You have to also look at 1 or 2 confirmations alongside your chart pattern before you can actually dove into that market. So that is about symmetrical triangles. Let's look at another one. Okay, let's see the case of still on symmetrical triangles. We can see the breakout here. All right, just to buttress it further. All right, see making what lower highs, making higher highs, and then here is the breakout, and then we push in for this buy market. All right, so the price breaks out of the triangle and makes a nice move upwards. Right, so this is a very good example of a symmetrical triangle. So all right, now let's see this ascending triangle. Now the case of the ascending triangle is quite unique. I will explain this way. How do we identify an ascending triangle? Simple. For an ascending triangle, okay, for an ascending triangle, we will have either a support level or a resistance level, a horizontal support level or an horizontal resistance level. So if we have, here is an horizontal resistance level, okay, and the market, right, begins to push up, comes, push up, comes, push up again, comes, push up this way, and eventually it breaks out. Now you could see this is called an ascending triangle. Why? Because we just have a, what's it called? An horizontal resistance here. Is that okay? We just have an horizontal resistance here. We just have an horizontal resistance here. And here is a breakout. Is that okay? It's a breakout. All right, here is a breakout. Now, so this, in this case, it hits this point drop, hits this point drop. You can see that this is an horizontal resistance, but we are having here what? Higher lows. Higher lows. Right? This, 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 this. So we are just having an horizontal resistance, and then the market goes hits this horizontal resistance drop. But you see that it did not drop to this previous low. It makes an higher low. Goes again, hit on it, drop. Okay, it gives us an higher low again. Goes, come back, gives us an higher low until it eventually breaks it out. Now, this pattern it makes is what we call ascending triangle. Okay, yes, this is what we call ascending triangle. The descending triangle, the reverse is the case for descending triangle. In the case of descending triangle, we have an horizontal support level, and then the market is making what? Lower highs, lower highs, lower highs, and eventually it breaks it down. So that is what we call a descending triangle. So you could see here that here is our horizontal level. The market comes, drop, comes again, hit it, drop, and then eventually we're expecting a breakout from this market. All right. So when we see this kind of a structure, what we are anticipating here is that the market is going to break on the upside. Now, in the case of ascending triangle, it is easy to know where the market is going to break out from. Unlike the case of the symmetrical triangle is a bit dicey. You don't know exactly where it's going to break out from. So we just patiently wait. Whichever direction it breaks out from, we know that, okay, fine, it's going for a buy or for a sell. But in ascending, it has a unique or directional move that, okay, this is breaking out on the upside, ascending. If it's descending, this is going to break out on the downside. So we have already what? A directional bias in the market of where the market is going to go. All right. So that is the case of ascending triangle and the case of descending triangle. Let's see further on this note, okay? Now you could see the case of the ascending triangle we're talking about, all right? So the market goes on and then eventually you can see the breakout. This is a massive move, okay? So the price breaks resistance and continues to move up. The bias wins the battle. So that is it. Now, there are people in the financial system that only trades triangles. And you can be a triangle trader, right? Someone who just look at the market and then you just trade whenever the market gives you a triangle, either an ascending triangle or a descending triangle or a symmetrical triangle. All right. So that is just it. So what you just do, and this triangle trading is actually a breakout strategy or a breakout trading. So we just wait for the market to do a breakout either on the upside or a breakout either on the downside. Okay. And like in the case of symmetrical triangle, we just wait for a breakout either up or down, and then we dove into that market. But in a nutshell, like as I've earlier said, that you don't trade chart patterns alone. You must have to run one or two confirmation alongside the chart patterns. For instance, if I want to trade an ascending triangle, and I know that, okay, fine, this market has done a breakout. This breakout, for instance, if this particular ascending triangle is above a 200 moving average, let's say I have a 200 moving average here, and then this particular market, this a 200 moving average, okay? Let's say this is a 200 moving average, and then this chart pattern forms above the 200 moving average. I'll be more confident to take that buy trade because for the fact that it is above the 200 moving average means that it is on the buy trend. So if it gives me an ascending triangle on the buy trend, if it breaks out, and I know I'll be very confident to take that trade. Again, if this particular pattern is given to me on below a 200 moving average, I'll be skeptical taking that trade. Even if I go into that trade, I'll be very careful. Why? Because I am entering that trade on a sell trend. Probably this trade is, I'm expecting to break out on the upside, which is a buy movement, but it is below the 200 moving average. So I'll be very skeptical taking that trade because it may not go well. All right. So that's why I said, if you're a chart pattern trader, you have to look at one or two confirmations to actually look into it to do some more detailed confirmations. Okay. But it's a nice one. All right. To use the chart patterns to trade. So that's about ascending triangle. Let's push on further to look at descending triangles. So let's look at descending triangles. All right, so now in the case of descending triangles, let me just delete this. All right, in the case of descending triangles, what do we look at? In descending triangles, the market actually, we are expecting an horizontal support system, okay? And then the market is gradually doing a descent. By that we mean the market comes this, 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 and then it breaks out. Okay? So we have an horizontal support level first. And then here, we now begin to look at it. So the market makes lower highs, lower highs, lower highs. So, and it's creating that pressure in the system or in the market. Okay? Here. And eventually it breaks out. Now, if I see this particular structure, like the case of this one here, and this particular structure is below a 200 moving average, okay? For instance, it's below the 200 moving average, and then it's giving me this structure and it breaks out, I'll be more confident to take that trade. Why? Because since the market is below the 200 moving average, it means that that market is in a sell trend, okay? Or it's under a sell pressure. So giving me a breakout in the sell or in downside will be like a confirmation for me, or a more confident trade to go into that particular market. All right. So I don't want to push it much in this particular case, because we just want to look at the case of the chart patterns and then see how it runs. Okay. So that is just what we got to look into in this case scenario. Now, just to buttress further, I may want to look into, let's see if we can actually look at one or two charts, probably, if possible, and then see how we can actually run it. Okay, let's see. Let's look at one or two charts, right? Let's see if we can have one or two charts. Okay, and let's see. Let's see. Just a minute. Let's see if we can have one or two charts, and then we'll see how that chart plays out. Okay. All right. I want to see one chart. Just give me a minute. Let me just run out the chart here. Okay. Just give me a minute. All right. So we just want to see how far. All right. So let's see. Let me share this. All right. Now let's see this particular chart. This gold, right? And let's come off fully, and then we'll see how we can run this stuff. All right. So this is our gold chart, and let's see how we can do this stuff. All right. So we want to see something. Okay, so let's have this. So we want to identify an ascending, descending, or whichever case, a symmetrical triangle. All right, just one of it. Yeah, this is our 200 moving average, and this is 4 hours, right? We can do it at any time frame, and let's just see how it works. Is that okay? All right, so let's see. For instance, guys, let's look at this one. All right. Let's look at this one. If you watch, we have an horizontal resistance level here. Okay, this is an horizontal resistance level. Is that okay? And okay, then here you could see what the market is doing. Okay. Now, what do you notice here? Can we say this is actually, can we say that this is actually a uh an ascending triangle? Okay. Can we say this is an ascending triangle? Right? Right? So this is an ascending triangle. How do I know that? Let's look at this. You can see that this is quite an horizontal resistance level. Is that okay? This market came, hit at this point, okay, dropped, hit at it again, dropped, right? Went up, hit at it again, drop. At each case, it is making what? An higher low. And higher low. Okay, this is a perfect one. It's making what? An higher low. Do you see that? And then here is our horizontal resistance level. Is that okay? So I'm expecting, now, if you watch again, this is above what? Our 200 moving average. And then I'm seeing this structure. So I'm expecting this market to push on and break. All right. And break this level. All right. For what? A buy. Now, if you watch very well, it came to this level, dropped, came to this level, dropped, just be hanging around this level. And now it is just making what? An higher low, higher low. So probably if it hits this point, it may drop, hit at this point again, and then push. But I'm expecting it to break that particular level, okay? And then boom, we move into the market for a buy. So that's the breakout. All right. So that is just the whole thing. So you now capture what I'm talking about being an ascending triangle. This is an ascending triangle. Okay. The reverse is a case for a descending triangle. Is that okay? So it goes on and then it breaks out and then we're going for a buy. So this actually for a 4 hours time frame, you can do that even in 1 minute, in 5 minutes, in 15 minutes, in 1 hour, even in daily, whichever any time frame. But this, I think, is the best because now we are seeing this structure above a 200 moving average, which means that we are seeing it in a buy trend, right? So if it breaks out, we are more confident to take this buy move, all right, as in this case scenario. Right? So that's what I just want to explain to us that if we have this structure above a 200 moving average, I think we are more confident of that trade, all right? And then we can take that trade. So this is just example. And I don't want to take or prolong this particular class so that it doesn't get boring as a result of staying much longer. So in this case, now, since we are having an ascending triangle, and this is our horizontal resistance level, we are waiting for a breakout. But if you go for a lower time frame, if the market, like now, this buy movement will be a very nice time to go as like a buy trend. People are going like gold is buying currently now, okay, buying, and we're expecting to buy up to this particular horizontal resistance level. Okay, when it gets to this level, two things will happen: is either from that point it retraces, okay, or it breaks it. If you succeed in breaking it, then we are confident to go in long for a further buy. Is that okay? But you can see the pattern it is making. This is simply a symmetrical triangle that is being formed. Right. So that is that for an example we have looked at in gold trading. So without much ado, this is a very clear-cut example. So let's just see if we can see another example. Let's look at another pair, probably just one more, and then we'll call it a day. All right, so let's see another example. Let's see this. Sorry, I just want to take off these lines so that see a clearer shot. Okay. So let's see. Now, if you watch this chart clearly, we have an horizontal support level here. Yes, we do, right? Yes, we do. We have an horizontal support level here. Can you see that? So this is an horizontal support level. Now, what next do we do? Let's see. Is to execute our trend line. Okay. Now, if you watch this carefully, now what are we expecting here? This market from this point dropped down. It's just making what? A lower high. Came, test this our zone, okay, went back, gives us another lower high, test this zone. From here, okay, two things may happen. It may break and go further, or from here, go up, test this zone again, give us another lower high, come back, okay, might break or push up again, gives us another lower high, and then eventually breaks it. Most times, when the market comes in contact with a very strong support or resistance level, it will give us this kind of structure. It is trying to build momentum, okay, to see how to break this particular structure. Now, what we are trying to look at in this case now, briefly, is that now this particular market, if you watch critically, is above the 200 moving average, correct? And so it breaking out successfully, there is going to be a little struggle because it is coming out from an existing buy trend. That's the difference when we have the structure in an existing buy or sell trend. Let's say if we have a sell breakout or a descending triangle, and that descending triangle is found in a sell trend, it's easier. One can vouch on it. But if we have it in, let's say we are expecting, we are seeing an ascending triangle, but that ascending triangle is in a sell trend, it's not going to be easy for it to just flow that way, except if the market goes to the very high momentum of volatility. Okay, so high volatility in the market. So in a case like this now, for instance, where we are having this kind of a scenario, we have to be patient. And even if you come in for the sell, we have to be very careful and be very skeptical about that trade. We do not just go all out until the market is way below the 200 moving average. We can ask, okay, fine, this market that assume a sell position, we can now put in. So what I'm trying to say is that we have more confident trade if we have this structure, these triangles in a sell market or above the 200 moving average or below the 200 moving average. Above, that is for a buy breakout, below for a sell breakout. Okay, so that is it. So let's just see if we can see a nice one here. I just look at what's it called? Market. Let's see if we can see how. But now you understand the case of ascending, descending. Okay, and symmetrical. Let me see if I see a symmetrical triangle, and then I can also elaborate on symmetrical, right? Okay. Let's see a case. If we have a symmetrical triangle or ascending or descending, and whichever one we see is fine. So it's such that you have to train your eyes to see, okay? And then once you see it, we now wait for it to actually, okay, let's see this. Let's see this. Should this work out clean? Yeah, but it's not really giving me what I want. Okay, so let's just see. Okay, this is 4 hours, right? So you can check other time frame, but this is a current market. Okay, so this is if it breaks it, and then below the it's below the 200 moving average, I think we can have a nice this. Let's see 1 hour. Let's see if we can check out on 1 hour. That's 60. Let's see. Okay, so this is what you can see it in 1 hour, right? All right, so let's see. Let's just back test. Let's go back to history and see if we can find okay, so they don't show up all the time, right? So, but when they show and looking at it with other confirmations, one can actually take a nice trade on that. Is that okay? Okay. All right, so let's look at this, guys. Let's look at this. Assuming we have this, let's take here as a horizontal resistance. Okay. Should we take this as a horizontal resistance here? You could see this particular point. I'm just talking about this segment here. Here. By that I mean here. This position here. This segment. Okay? Yeah. And if you watch this particular segment here, you can see that this market seems to have an horizontal resistance here, okay, alongside with the 200 moving average. And then at the same time, it is making what? Higher lows. So we have this structure here. You see? Drop, came back, drop. So we have this. Like I said, you have to train your eyes to see. Okay? And the next thing, there's a breakout. This one, even there was a jump, there's a gap rather, and then goes. It only came and retested on the 200 moving average here and then push on. So you can see. So like that's why I was saying in the other case too. Now this case, now the market try to like break out. It's like in a sell, okay, and I break out come above the 200 moving average, which now gives us a very nice buy position. So now we go. All right. So this is what we are looking for. First, we want to see an horizontal resistance or support level, and then the market making higher lows or lower highs. Break that horizontal level, and then we now have a position like a confidence. Okay, since it has broken it, so we are having a buy position. But again, like I earlier said, we have to look at 1 or 2 confirmations to verify that this is actually like this one now. It has broken above the 200 moving average, so we'll be more confident to take this trade for a buy movement. Okay, and then our stop loss at the nearest swing low. Okay, so there we drop our stop loss. So this is how we take this particular trade, guys, and this is what is known as the symmetrical descending and ascending triangles. I just only talked about triangles. On Thursday this week, we're going to see deep further in this particular case of chart patterns, okay? And we'll take more examples on triangles and then move further to the other ones, such as double top, bottom, okay, and head and shoulder and the rest, okay? So that is what we are going to look at. And this is a very simple system of trading. So you can use the chart pattern alongside your 200 moving average. The last class we had is understanding the 200 moving average. So this is how you can also combine the 200 moving average with your chart patterns. Thank you so very much, guys, for this wonderful time we've had. And I believe that this will help you to have a peaceful week in the financial market. Thank you so very much, and bye-bye.